got a text.
Good morning, everybody. It's Tuesday, January 30th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments or would like to chime in on anything we're talking about today, just drop us a note in the chat area, and we'll get to it during the show. Quickly here, overnight markets had March corn down 1.5 pennies at 438 3/4. May soybeans were up 2 at 1207, and March Chicago wheat was down 5.5 at 588. Nothing in the way of export sale announcements here this morning. I think we'll just kick it right off. We saw pretty poor export inspections in the bean complex yesterday. I know we're coming into, they're continuing to ramp up harvest over in Brazil. I think we're at about 11 or 12% according to Ag Rural. So we should see sort of a switching over of that business, but still a poor number, and things act pretty bad here. So Dustin, what do you got for thoughts this morning?
Yeah, I think when you look at beans making new contract lows yesterday for the move at least, and this is going back to the lead month contract all the way to 2021 if you're looking at just the front month contract. So I think that bear markets a lot of times will have a long tail, especially when there was a really convincing story to try to beat long beans over the winter because of the start of that drought in Brazil and very low acres in the US, huge crush margins, and the promise of growing renewable diesel in the coming years. I think a lot of people felt fairly confident getting long beans, and I think that as the funds have really flipped into a short position, we're feeling that exit of that position by a lot of those participants, and it's just taking a while to do that. And you look at the chart, and it's been fairly orderly. And we've had little rallies here and there, but a fairly orderly liquidation. And sometimes, especially in levered markets like commodity markets, as margin calls tend to generate a position change. I think that could be what we're seeing still.
No, it's good stuff. And I was reading a story this morning. We continue to talk about the downturn in the China's economy. What was once one of their largest property developer has been forced into liquidation. So I think it's still a pretty bad picture over there, by all estimations. And more of these stories are coming out, which I think has to be driving that administration and their leadership crazy, right? They like to keep everything close to the vest, but it's at this point it's hard to argue that things are definitely in a bad state over there.
Yeah, I mean, whenever we hear headlines of that, and I think that Chinese economy has been something that has been talked about a lot for soybean price direction. And the biggest things that we've seen from China, though, for slowing demand have been things like ASF and COVID. But they've been pretty steady. I mean, they've been importing quite a bit of corn this year too. It's just not been from the U.S. So we're feeling that we are the world's residual supplier of these things. We really needed South America to have a bad crop to see prices maintain, to not build. And the fact that Brazil got the rains at a very timely start. They had a poor start, but a very timely finish. Argentina's had a very strong start. It's having some heat and dryness right now. More rain and cooler temps to come in the extended forecast. But, they have huge number of acres planted this year, Brazil especially. And 150 plus million metric ton crop is enough to still probably satisfy a lot of Chinese soybean needs. And also they've been satisfying their corn needs. And the safrinha crop is still yet to be grown, so on large acreage. I think that's what the market's feeling right now. It is counter-seasonal. I don't want to be all doom and gloom. I think that, the idea that a lot of the market is just starting to get bearish, we're noticing on social media. The pendulums do swing at certain times, right? And you convince enough people that, we're now in a bear market. Well, we're also below cost of production for going into the next year. Spreads are still not as wide as we think that they could be if we're carrying, 2.4 billion bushels into the next year for corn, for example. So I think there's a lot of things out there that have started to get priced into the market properly. But we have a lot of growers from university data showing that growers are going to come into the year severely underwater for planting 2024 corn. And I think that's going to be one of the interesting debates as we head to that March 30th report is, showing that the farmers are actually planning on planting a lot of corn on corn going into what looks to be a larger net loss than beans on corn. So that's one area that I think will be of a hot contention going into March 30th, and that will probably be a lot of our discussion.
Yeah, I think you're starting to see that too. I mean, you mentioned social media. I mean, it's been a good portion of the night last night going into those rabbit holes of discussing acreage breakdowns, and it's a hot topic for sure. Justin, I thought you made a good point this morning. Yesterday, there were stories from Friday of some imported beans coming out of South America, and you had mentioned that maybe that the pricing arbitration there is gone away.
Yeah, I think so. I think those things usually, I don't know if it's an end user that wants to get some attention on just the fact that, domestic prices are way too high. They try to prove a point. So I think there's 4 cargoes booked. Those kind of arbs usually close down pretty quick. And that's why, I think what's happening here makes sense with spreads. We know the farmer, and I underestimated this for sure, but just the length of the farmer, how much physical corn they were holding in storage, unpriced, and I think the market's working through that. I think that's why we're seeing the spreads, widen as they are. Before you know it, we're gonna be going into the next first notice day decision for the March contract, where farmers have to roll or price. And I think, cash is getting tight, bills are coming due. So I think it's frustrating a lot of people. They're having to move some physical corn. And at the same time, I do believe it's part of the spreads that's seeing new crop corn trying to hold some kind of a support level here, as all this kind of front end weight is on the market, right? So we've seen corn spreads and bean spreads kind of collapse. I think the farmer was a lot more aggressive bean seller at harvest for, just a higher flat price, and they generally like to store corn. But I think spread action and like the structure of the curve makes a lot of sense here. And I think that can continue. I personally believe as we go into February, December 24 futures or corn futures are going to try to build from here to some degree. So I'd be surprised if we were sharply lower than this, for crop insurance. I know everyone's saying 93, 94, 95 million corn acres. If it happens, it happens, obviously. And we don't really see the math of why you would do that, especially like we said, corn on corn does not make a lot of sense to us with just the yield drags we've seen, and with our customer base, and sticking to a good rotation with beans is a really profitable thing the last handful of years for sure.
Well, and it's beans are not the throwaway crop. I mean, they're putting programs to them. We've seen that in the last 5 years, right? I mean,
yeah, absolutely. It's not just a cover crop, right? It's a real crop.
Right.
For people that manage it correctly. They're getting 80 plus bushel beans. $12 is a lot of money still. And that Dustin made some points. The thing is, when South America has good to decent crops, just too much. And the China thing, like you, Dan, you talked about their economy, and their protein demand is strong. And we talked about this, I think, a week ago or so, about you can make a good argument, I think, about the demographics and that they're hitting peak protein demand in general. It's probably going to be some of these other developing countries. We had that, that webinar yesterday. John brought up some good points about 85% of the population in the world is in a developing country, right? So we're probably going to see some growth in some of these other areas outside of just focusing on China. China changed their feed ration from a really hot meal ration when feeding hogs. They've ever since the trade war really been focusing on making that more efficient. We talked about they purchased Syngenta, so they've been monitoring the situation, really trying to be less efficient on the U.S. in general.
Yeah.
Right. And they've done a lot of different things to be less reliant on importing in general as well. So when you have these big South American crops, we're coming off of a relatively large crop as well. It's just too much in the short run. you know.
Yeah, no, I think that's a great point. I think they learned a lot in the last trade war, right? To definitely diversify and, and it's obviously not to our benefit, but we still, to your point, I thought it was exciting when John brought that up, though. If we open up new markets, that could be exciting for the American farmer. He's not even, doesn't see it today, but down the road, we could maybe potentially chew through some of this large demand.
I think so. And I think that's why, you are getting good lobbyists, and I think eventually you will get, some renewable aviation fuel and biodiesel, renewable biodiesel is here to stay because, why not? Why not provide some of our, use our own crop and stuff. And it's just going to be always hard to compete, in my opinion, on exports with other countries, just the way we're set up.
It'd be interesting, Justin, too, just, we're kind of headquartered in Northwestern Illinois. I know your family's farmed for generations in Northwestern Illinois. And, there's the potential for a big biodiesel plant to come online. Timing hasn't quite been finalized, but having talks with growers that are primarily corn on corn growers, they're looking forward to transitioning into some more soybeans to get that, feed that market. And I think that's just exciting times for, I think, a lot of folks that are in these areas, on that front.
Absolutely. I mean, it's more options, the better. I wish we had more options than just corn or beans. And I think a lot of farmers probably feel the same way. Only so many people can grow weed, and there's,
yeah,
it's kind of the problem is you'd like to have a market for both, right? So you can keep a really healthy rotation. It overall drives your yields up over time and your costs down. So yeah, I'm a big fan of renewable biodiesel. I think that kind of helps everybody.
Yeah, definitely. It'll be fascinating to see because, I mean, this is really good black dirt that guys are growing corn on corn, and they love to grow it, and to see what that'll actually switch. Yeah, I think it'll be a telling sign for what we look at out forward, in terms of acreage swaps and things of that nature.
Yeah. And I just want to say one more thing too, real quick, just, talking about the mentality of, being bearish. And it seems like the herd mentality, sometimes when it flips from being bullish to bearish, it's multi-year bearish or multi-year bullish. Instead of just, kind of selling what you have to, or looking, taking one crop year at a time, or, kind of being objectively looking at it. It feels like a lot of times that pendulum does swing so far, because once the switch flips from, okay, we're all bearish now, so now I got to go sell 24 corn, 25 corn, it's going to 3, I think that's why we get such these big, when we're down in these kind of markets, it goes longer and further than you think.
Yeah, I was going to say too, right? And that goes for end users as well, right? I mean, if you're watching corn go down every day and you're looking at new crop corn prices, I think they're able to kind of feel a little more comfortable, not having to hedge their needs as well, and kind of, going right along with the American, farmer of the sentiment of a bear market, right? Cattle prices have come down. And so I think everybody on one side of the ship, to your point, Justin, if something changes or something flips, it could be dramatic.
Yeah. And I think too, is this your point too, Justin, that you're saying like that's largely probably what a lot of the de-selling has been producer selling, because all of a sudden everyone's worried that if it's going to be a bear market, I might as well sell. And that's where the fresh sellings come in at, right?
I think so. I mean, we blame the funds, right? They're the villain in this usually. But the number of contracts that they're selling is minute. Honestly, if you look at the big picture of how many bushels we have, it's farmer selling, it's cash, it's people hedging. And to Jason's point, like if you're an end user right now, like there's no need to step up and buy 6 months of corn usage, right? You got a big carry, right? So it just makes sense to be kind of hand to mouth for those guys. Like Jason said, if something major happens, obviously that mentality can switch rather quickly, and that's where you get kind of big short covering rallies. But I think that's more of a why we are here, versus like what do we do from here? I think we've talked about hopefully trying to carve out some kind of low, especially in new crop, corn and beans. But until we work through whatever bad long positions out there, it's probably going to be tough. Rallies are going to be tough to hold probably.
Yeah, and but I think we've seen this so many times though too. Is like the mentality shifts, and it's like there's nothing that's going to turn the ship around. And then you get years like 2019, or even like what happened last summer, And all of a sudden, it's this massive panic bid to make sure end users are going to be satisfied, right? Because of some sort of weather event that pops up. And we still have to get through Safrinha corn. We still have to get through U.S. corn planting, and of course, both those could go just perfect. But when you pile in, and we're starting to see this from a lot of different commercials pushing this as well too, is all of a sudden accumulators are back in vogue again. And so that's like one way to get $5 corn still is everyone jumps back into the accumulator train. And then if something like that does pop up, that's where I think things get especially volatile, because you've got everyone saying, okay, I'm getting run in on these, or these are killing me, and they buy back out of them, or buy something else that tries to cover them. And so I just think that's something to kind of pay attention to, is the setup is there for if there is a short covering rally. When you have had it move like this in a mentality shift, sometimes those rallies are violent, just because of the positioning that was taken into that.
Well, 100%. Yeah, I mean, sorry, Jace, go ahead.
Well, I was going to say, and on top of that, right, you always hear these stories after the rally, but, people doing too many of these things, right? Too many accumulator double ups and, double short to catch up type of trades that too many people fall victim to in bear markets or in bull markets, right? They get caught to that point and try to play catch up.
Yeah, I mean, that's, we talked about this offline, but reminiscences of, 2020 to me, where people wanted to be triple short, right? Because if I could pick up money on my, on my ARC County or my PLC, and I can be short on the board, and I can get crop insurance payments, like I need all the money I can get because this is a multi-year bear market. You're starting to get some of those kind of echoes out there. People have short memories in these markets, really short memories. And, we remember the most recent bull market or bear market, and that's really can mentally mess with us. So I think we are, right, because you see some of the same people that were wildly bullish are now, wildly bearish. So it happens when you finally demoralize somebody enough that they have to switch. And I think we could be close to that.
Yeah. Now, good discussion here this morning, guys. We just came into the open quickly here. We got March corn is down a quarter at 440. March soybeans up 6.5. 1201 is the last, and March Chicago wheat is down 3 at 590.5. Justin mentioned it a little bit yesterday. We had our first exclusive AgYield consulting client webinar with John Wenzel. We discussed some energy and fuel market trends. It was a great show. We're thankful to John for taking the time to be with us. We will also, we're in the process of putting together our next exclusive content. It will revolve around PLC and our county payments, or payments, I should say, decisions. And so we will be putting that together. Keep an eye out for more information on when that registration will open, and we'll get that to all you clients. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time. Appreciate all the feedback here this morning, guys. It was a good conversation, and we look forward to talking to you tomorrow. Have a great day.
Yep, thanks,
Thanks,
Dan.
guys.